So what's the housing market doing? Well, I've got some topics today that I want to quickly go through. I have a dozen or so slides. I'm going to say a few things about them, then move on to the next. I hope this is interesting to you. It sure is to me. This is Ryan with SacramentoAppraisalblog.com. Let's jump in. So first of all, in the Sacramento area, we've seen really aggressive price growth lately, particularly over the past few months. And so it's mind-numbing to look at the median price in the region and think that it's up 14% compared to where it was last year at the same time. Just remember, here's my pro tip. This doesn't mean that your property is worth 14% more. This is a regional stat. It may not apply at all to your price range, neighborhood, or the type of property you have. In Placer County, and the same is true of El Dorado, we've seen explosive growth with sales volume this year, these past 3 months. Okay, here's a way to look at the market. In 2020, you can see July in red, August in green, and September in purple. And this year, in terms of the number of sales happening, has far outpaced previous years. Okay, home size in the region, you can see a spike recently, the median size in red and the average size in blue. And so buyers have very clearly been purchasing homes that are larger in size. And so it's sort of true what people are saying, that there's this sense of quarantining in style in larger homes. For 3 months in a row, we've seen homes, the average home size in the region above 2,000 square feet. A lot of this has to do with larger homes being targeted in Placer County and El Dorado County. Days on market's an interesting thing. Basically, in short, when we compare this year with last year at the same time, we can see that it's taking 7 fewer days or even more days or less days to sell this year. Okay, and so it's been a much more aggressive market. It's no surprise to see this in the stats that properties aren't sitting on the market as long. Here's an interesting trend. Now, so California passes SB 1079, and basically what happens is that when an investor buys a property on the court steps, the tenant has the first right of refusal, okay, after the trustee sale. And so basically the investor may have to sell to the tenant if there is one. And so there's this trend in California right now, though, of creating laws like this, of legislating to, I think, cater towards the tenant or favor the tenant, whether you look at rent control or moratoriums on evictions and such. And so this is something to watch, okay? And I know there's strong feelings about that. I'm not taking a side. I'm just saying that this is a legitimate trend that we're seeing in the marketplace. Here's Manhattan. Okay, kind of random to share, but I want to share something that, you can see this huge increase of the months of supply in Manhattan right now. This is from Jonathan Miller, and it just goes to show that the market is not the same across the United States, because here's our market in Sacramento, and you can see that, all these graphs, every county in our 4 county region basically has less than 1 month of home supply right now. And so we are far different than what's happening in Manhattan. So it's a good reminder that not everything being discussed in real estate articles for Manhattan or San Francisco will apply to Sacramento. All right. Now, here is an interesting graph, though, from Mike Simmons of Altos Research. In 2020, you can see this line below. Here is available inventory by week on the national level. And you can see it's broken away from, the normal trend from previous years. And so even though there's not a national real estate market, what we're seeing nationally is just a gutting of the market in terms of increased demand that's driving down inventory and, owners not listing their homes. And so we have this problem nationally right now. All right. Now, this graph is tiny. I apologize, but I didn't make it. This is from Yardi Matrix, and it basically shows rent growth over last year. Now in Sacramento, I've highlighted it in yellow, and you can see that Sacramento has had about 3% rent growth this year compared to last year. Now, at the bottom of the chart, you can see San Francisco and San Jose with rent declines, and they're at 5 or 6% or so where rent has gone down. There's even been discussion in San Francisco where one-bedroom apartments, I've seen some stats that would suggest that rent is down between 20 and 30%. And so whose stats are right, we'll see. But this is something to watch because what happens in the Bay could certainly influence Sacramento. Here is one thing to consider, though. Here's a graph of Sacramento from Yardi Matrix, and you can see that the market is up 3% this year, but look, in previous years it was up 8 to 10%. And so, if anything, momentum has slowed for rent growth. And I know tenants, if you're watching, you're thinking, yeah, but my rent still went up. I know, and that's painful, believe me, I understand. But we're having growth not as much as we've seen in the past, right? Here's an interesting way to look at the market. I shared something last time about this, realtor.com. Here's the link where I got it. And here's where views on realtor.com for Boise County and Idaho. And you can see that Sacramento is number 5 on the list. I don't think this is a surprise because so many people in Sacramento are looking at Boise. Now, here's the thing. I don't put a lot of weight on search queries. I think that this is fascinating, it's interesting, but ultimately we need data like who is actually buying because people can look and if they're window shopping, that's fine. But if they don't make a purchase, then it doesn't matter. And so take this with a grain of salt, but then again, it says something about the market, doesn't it? The $1 million market in the Sacramento region has been strong. There's basically, so far, there's been about 130 more $1 million sales this year. $1 million sales represent 3.32% of the market, basically the highest percentage ever in the Sacramento region. Here's an interesting graph. There's so many dots here, and I just have a few more visuals. This is Del Paso Heights in North Sacramento, and you can see from 2012 onward that there's been exponential growth in the market. Now, a graph like this clearly shows an increase of value of $200,000 or more. And so sometimes I say the best thing to do to gain value is if the market's going up is just to sit back and watch, maintain your house, and then you can gain equity without doing anything. But a lot of graphs in the region look like this where there's been $200,000 plus more in value. Okay. And by the way, if you like this, if this is helpful, please make sure to hit the like button. Make sure to comment if you like, if you have insight. But a couple more things. FHA this last quarter saw a little bit a dip from previously. It was around 15%. It's around 13%. I don't think this is a surprise since it's just more difficult for FHA buyers to compete in this market. But keep in mind, between FHA and VA, it's still about 20% of the market in the Sacramento region. So roughly 1 in 5 sales are going FHA and VA. And so it's still viable for sellers. Don't be afraid to accept these types of offers. Okay. Cash is only 11% of the market. All right. Is that surprising? I think sometimes people feel like, wow, it's investors are just, buying everything. Bay Area is buying everything. But, technically it's not cash. Now, conventional financing is over 60% of the market. So conventional totally dominates. And so clearly, people who have money, they're not always using exclusively cash, right? The last one, multiple offers. You can see that when compared to January 2017 onward, where we're at right now, we've seen way more multiple offers than any time since this metric's been started in MLS. And so basically this September, we saw 41% more multiple offers compared to last year at the same time. And so these past 3 months have been very aggressive in the market. So I hope this was helpful. Thanks for watching. Thanks for listening. If you have any questions or insight, please comment below. But thanks for your attention. Look forward to the next one. Take care.